Welcome back. You're watching the Smid Show on NDTV Profit. I have with me the management of NCC Limited, Mr. Nirad Sharma, who's the head of strategy there, to talk to us about Q4 numbers. First off, welcome, Mr. Sharma. It's a solid set of numbers from NCC. You all have beaten your guidance yet again with regard to what you had given at the end of Q3. Talk to us about what the numbers will stack up like in FY25. Talk to us about what the growth number looks like, and it's a higher base, so give us some perspective.
Good. Very good morning to you and your viewers. For the FY25, we have shared three set of numbers with the street, and I am happy to share that with you as well. The first number that we have shared with the street is order inflow guidance of 20 to 22,000 crore. The second guidance number that we have shared with the street is revenue growth of 15% upwards. The third guidance that we have shared with the street is margin guidance of 9.5 to 10%. So these are the three numbers, but you rightly highlighted that this is on a higher base effect, and in the last financial year we have really delivered a growth of 35%. And if you really see our performance in last 3 years, in last 3 years, continuously we have delivered a growth of about 35%, in the revenues. So that's a good base, but still I think we have the number that we have worked out and shared with the street is a good and, aggressive number, good numbers to really target.
Sure, Mr. Sharma. I just want to try and get this right, because you've done order book, incremental order book addition in Q4 of roughly 5,000 odd crore. And therefore, are you not seeing too much growth on that high base in terms of order book? Because your guidance seems to suggest 22,000 crore, which is roughly the same number for next year, especially given the fact that there has been so much thrust which has been put on infrastructure.
See, we really do not share the order inflow guidance quarter to quarter. What we essentially share with the street is, the annual number. And that number for the last financial year was, 26,000 crore. And we have been able to, surpass that number. What we have reported is, more than 27,000 crore. So the guidance that I have just shared with you is not really for a quarter, but for the whole financial year FY25.
Let me catch this in a different way. So last year you did 27,000 crore. Next year you're going to do 22,000 crore. Why the cool off? Especially given that, infrastructure is really, the government as well as pretty much everyone is looking forward to the capex cycle.
Very good question. Very good question. Give me a couple of minutes to answer that.
Sure.
Firstly, we all of us are aware that, this year is an, exceptional year. This is an election year. And whenever, the elections are taking place, the government, the decision making sort of freezes. And as we speak, the infrastructure space continues to be a market that is dominated by the government. So if the model code of conduct is in force, for 4 to 5 months, naturally, we have to take about a quarter or so out. So in practically what we are talking about is not really 12 months. We are possibly talking about FY25 of 7 to 8 months. So the number that we have really shared with you, if you really extrapolate that number a bit, if you really, or the other way to look at this number is if you calculate this 26,000 crore what we have delivered last year, or 27,000 crore what you have delivered now, and calculate the number for 7 to 8 months, it would be a number, little less than what we have shared. And this time, for a change, we are talking about a band that is 20,000 to 22,000 crore. I hope that answers your question.
Absolutely, sir. Sir, also on the Q4 margin number, slightly on the lower side?
Slightly, but we have to really see. Fortunately, we have been able to settle a lot of legacy issues in the FY24. And that is the reason you see the impact. But we really don't talk about in our line of business the margin guidance quarter to quarter. It is always helpful to look at the whole year, and then because in the infrastructure business, it is not really about a quarter to quarter. The most of the projects that we get to execute are for 4 to 5 years, and there are different payment milestones. So it is always helpful to look at the year in totality. And even for the FY24, the margin guidance that we had shared with the street was about 10%, and we have been able to hit that number for the year as a whole.
Sure. So one thing that I've been noticing is that while your top line number is expanding sharply, at least this year, your working capital in proportion to top line has remained steady, which has enabled you to execute better on some of the ROE metrics on the return ratios, and that's happened for a couple of years now. What can you tell us about how receivables are trending? And what trends can we see in FY25 thereby? Where should ROE typically start to inch higher than this, remain steady, or was it a one-off couple of years?
Very good question. Very good question. In fact, what we have reported in the FY24 is one of the lowest debtor debt, that is 57 days in last 2 decades. The working capital also one of the best numbers that we have reported last year, that is of 76 days. So our focus is always to bring the capital, working capital days down, in the range of vicinity of about 20%. So this is the direction that we have set for ourselves, and we really plan to be very as close to that number as possible.
So where will it go from here? Can it improve, sir? Is there scope for more improvement? Is the improvement going to be incrementally slower, or is it going to be steady state? You're happy with what's happened?
As I shared with you, our intention is always to bring it, bring the working capital days, as low as possible. But in an infrastructure business, there are different guidelines. We are talking about different kind of state government clients, central government clients, and there are payment guidelines, measurement guidelines, milestone guidelines. But as I shared with you, we hope to improve upon that number. But we really don't share the working capital as a percentage of revenue on in terms of number of days, because at the end of the day, essentially what we really need to look at what is the return that we are able to generate for the shareholders.
But sir, it's an essential component of the return you are generating, and it's probably what's led to that ROC expansion, and hence I would urge you to disclose that number, if I can, of course. But sir, okay, I'll take this forward. With regard to debt, debt was at roughly 1470 odd crore at the end of Q3. So where does it lie in Q4? Because your FY25 guidance seemed to suggest a compression of almost 500 crores from here, from Q3, of course. So where are we in that journey?
The debt number that we have really closed at the end of March is, the gross debt of about 1,005, crore. But if you really look at the debt, if you take the cash and, cash equivalents out, it is, very close to 500 or, 478 crore when you look at the console number. So it is very close to, 500 crore number. So we have been able to bring it down substantially.
Okay, more compression expected going into FY25?
Hopefully, yes.
Okay, understood. Where would it lie?
Difficult to predict.
Okay, understood. I pushed my limits. Thank you so much, sir. It's been a pleasure speaking with you.
Same here. Thank you very much. Thanks a lot.
Right, Mr. Neeraj Sharma, who's the head of strategy at NCC, talking to us about numbers and guidances for FY25 as well. So, but completely out of time on this edition of the SMID Show. From myself and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.